Good morning. Welcome to Admiral Markets webinar. Today's focus is strategy. My name is Chris, and we're going to take a look, of course, at technical analysis on the charts. First of all, though, be aware that this webinar is shown to a global audience, may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more about that. Also, please be aware that trading for exchange and global financial markets is considered high risk, may also not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Just in case you're not aware, take a look at admiralmarkets.com. There is a special bonus basically available for you, up to 50% deposit bonus. That is to the end of May, so you still got a couple of days left. Of course, just take a look at the terms and conditions to see if it's something for you or not. All right, so very interesting. There's still a couple of days there for that opportunity. So looking at the heat map, we see some green and red, some pound pairs here to the upside. Let's take a look at our currency markets here. You can see big movers, Apple, for instance, NASDAQ on the downside, Facebook on the downside. Regarding Forex market, though, we see basically currencies staying within the 1% range, and that, of course, is not untypical. If it goes above the 1%, then it's a big movement. We see a couple getting close, maybe like the odd Swissy, pound Swissy. We see a lot of volatility on, well, guess what? The pound pairs, of course, as always. So that's a bit of a standard picture at the moment. Pound number one and dollar second to last. This is about the standard as we can get. That seems to happen a lot. Let's take a look at the calendar. Unemployment rate we got coming up on the pound. That's a big one. Marked as red. Claimant count change as well. That's 1 hour 43 minutes from now. Those are biggies. And well, we have FOMC meeting minutes. So we get a bit more information again, what the Fed, is thinking, which direction are they looking at? Will we get a rate hike? When? How many? And at this pace, at the current state of affairs, I mean, I look at fundamentals, not on a daily basis, but once in a while. It doesn't seem, of course, like as we said, I think 2 weeks ago, Ned and I, the dynamic has a bit changed. So maybe one rate hike could be coming up, but I don't think we're going to see 3 of them this year. Excuse me. All right. So with that said, let's take a look at our chart. So let's take a look at a couple of the majors. Or let's take a look at the majors, a couple of other pairs, and then we'll dive into discussing our strategy of today. So let's kick off, as always, with the euro dollar. We had an upbeat, kind of momentum here. And I said, well, maybe there's a good chance the price will get up to 113.75. Well, it didn't get there. And that's always tricky with reversal trades and, retracement trades that are going against the trend. And that was clearly, we said that clearly yesterday that the trend was down. That's always tricky, though, when trading reversals, that they sometimes fail in making this kind of zigzag here. Price really struggling, making kind of like ups and downs, a heartbeat day as I call it. Why? Because it starts here, goes up, down, up, and it ends at the same spot, right? So like a heartbeat. So that was basically, I think, yesterday. I eventually reached 113.50, right? But anyone using a trail stop, anyone who took a long in here and used the trail as I mentioned at least, would have been about break even probably. Let's see, 20. Let's see. Yeah, no, a few pips. And yeah, just a few pips. So that's a few pips lost. That's not a big deal. So yesterday we saw that eventually price break this bear flag, but it happened later. Right, we got a trend line like this. Let me make that solid. 1 second. There we go. So we broke this trend line after yesterday's heartbeat day. Doom, 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 doom. Right, and then this was during the Asian session, though, and prices already moving lower. So from that point of view, Let's take a look at this fib. What this is a big fib. Ah, yeah. Okay. Let me take that off. All right. Good. So price is now in a breakout. Could be a breakout trade right now. There's a support level down in here, and that's still 112.50 is close. 112.25 is a bit further. So there could be a bit of a space here. Not a lot. If an entry is taken here with a stop loss above the last 4-hour high, right up in here, then that will be a stop loss of about 35 pips, which is not bad. And if the target is 112.30, that would give about 50 pips. So it's about 1.5 to 1 R2R. It's okay. It's not great. The 4-hour candle looks pretty strong. We got a close near the low. It's a decent candle. It's during the Asian session, which means that the size is actually pretty decent. And it's a breakout candle that looks pretty okay to me. We clearly see a bear flag here. We clearly see momentum prior to it. We see the moving averages aligned. So I think there's nothing wrong with that. Now, would it become a bit better if price were to make a bit of a pullback here, right? And then turn? Obviously, yes, because the stop loss becomes smaller and the reward becomes bigger. If we look at the boxes of R2R, reward to risk, let me go on the 4-hour chart. Sorry for moving so fast. Okay, so obviously if I have a trade here, halfway this candle, this becomes my risk. And I still think that the stop loss above the candle high is okay. I mean, it's a bit risky because it's tight, but it's okay. And this becomes my reward. Now, if I take it here, this becomes my reward. And this becomes my risk. All right, so you can see that a 1.5 to 1 becomes maybe, what is this, a 2.2 to 1 maybe, perhaps, right? Instead of a 1.5 to 1. So that's a a difference. But the disadvantage is that price might not retrace and could keep falling. So it might not make that retracement. That's something of a risk, of course, but to a certain degree. So anyhow, let's see if we get the retracement. I think if it does retrace, it will be interesting. I don't think, considering this is looking like a supply-demand zone here with the momentum prior to it and a momentum after it, I think that it will not break above this high. So using the 4-hour candle high, I think it makes sense. All right, so using that as a stop loss placement right there at 113.20, 21 should be fine. I think an entry, if it does retrace back to well, obviously the 78.6 fib would be wonderful, right? But even the 61.8, any of these 50, any of these 3 fibs could be great. Or even the 38.2, any of these fibs gives it, to be honest, gives a discount. It just depends how much a discount, right? All of these fibs give discounts, but obviously the higher, the more discount. So let's see if that pans out. Let me keep that fib on this 15-minute chart. We can take a look at this 15-minute fib throughout the session and keep an eye on it. From a larger perspective, okay, that's the short time frames. From a larger perspective, the question from my view is this kind of like a correction, an ABC correction, or is this a 1, 2, 3 bearish reversal? So to answer that question, I would put a fib from here to here, from swing high to swing low. Sorry, from here to here. No, something is missing. Something does not add up. All right, hang on. Let me take a look at my wave analysis somehow, or maybe, no, I'm getting confused with the pound. Okay, doesn't matter, sorry. So anyhow, I thought it was a 38.2 fib hit, but it kind of missed it here. Well, nonetheless, price topped at the 272 target, right? So Next target could be this minus 61.8 perhaps, but there's a bottom here as well, so that's something to reckon with. My point is that it really has to, for this to be a 1, 2, 3, it would have to really break below the 61.8 target at the minimum, preferably below the minus 100,000, minus 100 target to confirm it's a 3. If it stops here, or even here, it's more likely an ABC. So it really has to extend at the minimum below this, but preferably below the minus 100. If it does that, then in my view, that's a strong momentum. That could be a reversal for extensive downside. So basically, that's important. If this is an ABC, it could still bounce and start to rally up to 117. If it starts to break below the purple line, right, then it's kind of a question mark still. But starting to favor more impulsive bearish breakout, especially if it pushes below 111. All right, and then of course we could probably test again all the way down to 108.50. Does anyone hear me at the moment? Ron is having some sound problem, apparently. Sound is gone. Okay, I got one confirmation. Thanks so much. Anyone else, please, to double confirm here? Okay, Ergo does not have sound, but Jose and Carol do. All right. Okay, 4 do hear it. Okay, sorry for that annoyance here. I don't know why. Maybe, let's see, let me just quickly write. I'll write that please log in and log out. All right. All right, so from that perspective, we could then test this 108.50, 108.40. Then we can start discussing whether price will break that. Then we could head to 105. If it breaks 105, you can go to parity, for instance, 102.50, then parity, etc. We take it step by step, of course. But for the moment, just keeping things simple. Once it breaks 111, once it breaks 112, down to 111, 111, 110, then 108.40. Right? Those are the zones we could start thinking about. This is basically a very big zone right in here, but you can chop it up in small bits, right? Like that. So it's going to be interesting how price responds here. It does look like it's going to get there very soon, considering the bearish break of the bull flag, the breakout. It should, there's a good chance it will get there to that decision zone today. All right, pound USD. Let's move on. So pound USD basically showing momentum to the upside, but let me just quickly write to Ergo. Okay, a bit of a mixed picture here, to be honest, from my opinion, because we got momentum to the downside, but we have momentum to the upside. We broke a support trend line here, right? But then made a pretty sturdy rally after that and challenged this resistance right there. Sorry, folks, I'm just writing someone who has sound issues. Bear with me. Alrighty. So it's a bit of a mixed bag in my opinion. I mean, kind of difficult to grasp it because obviously we're in a downtrend, but then we had divergence, then we made a 3-wave correction. Is this going to be an expansion of that correction, or are we going to finally turn around after these 3 waves were finished, perhaps, right? An ABC, perhaps. So I think it's kind of like from this perspective, it's very, very much squeezed into two different ways, and it can really, depending on how it breaks out, it can go all ways, I think. If at this point, I mean, we do have momentum, but it could be an ABC zigzag as well. So I am really going to be cautious with this pound at this moment. I think that there could be a chance of a breakout to the downside if price breaks below, let's say, this particular support trend line, or if it breaks maybe above, this is a steep resistance line. I don't think that's usable. Let me put the fractals on. Maybe above the second fractal, right? Above the second fractal, you challenge that trend line, break below. This trend line could indicate a breakout to the downside. But am I really jumping for joy? No. It's, you know, we're analyzing it because it's the pound. If it were the pound CAD, I would skip it because you know, this is not really looking that interesting to me, from my perspective at least. Now, could put a fib like that, and you can see it stops at the 50 fib, so it could be a bouncing spot, right? And then there could be a potential rally up to the target like this, and if we put a fib from here to here, we probably see confluence between the 272 target and the 50. If anything, I think looking for shorts at this confluence here does seem interesting, right? That would probably be the only thing I'm really very interested in at this moment. But if price does poke through here, kind of make a bull flag, maybe, right? But I'm sure there's something more interesting. But it could be something to keep an eye on. Dollar yen is basically trying to break out. Now, that candle yesterday was strong, but despite that, it had a lot of downside candles after that. And the retracement was a bit steeper than I hoped for. But those things can happen sometimes. If it did stay within the channel, right? Channel's still intact. And basically, I think that there's a good chance of price now getting up to the targets here. I have two fibs on, the first swing and the second swing. All right, and you can see that 111 seems to be a good confluence. Alrighty, so anyone who took that trade, well, is and still in it, then I think that would be the target. If you're not in that trade, well, then I think the only thing to wait for is probably this 4-hour candle. Let it close strongly and wait for a retracement halfway. I think that's the only thing that can be done at this moment. Stop loss below this bottom. All right, Australian dollar made an upside yesterday, but is actually this news event. I said could be a good bounce still for further upside up to this resistance level. Right here, or this one. That was a strong area. And basically, you know, the price didn't get there. It made a dip down, and it seems like it's breaking to the downside. All right, so that 4-hour candle looks strong, but as you can see, it's always a bit tricky when you have a momentum like this riding behind it. Then sometimes these things really, in a way, fail to get followed through. It was a news event, and it really didn't get any push higher so far, and it doesn't seem like that's happening. Now, considering the support that is around the corner at 72.11 from the 61.8 and from these tops, I'm basically neutral on the Aussie at the moment. I'm really not interested in trading it too much right here. If it would have been different, it would have been here, for instance, if there was this little triangle here, right? That's a good chart pattern because it offers us a great way of trading the upside break or the downside break. And you might think, how about this trend line? Right, but even that trend line broke. All right, so this audio problem is very persistent, unfortunately. I don't know why. It's not from my side because from my side I see the settings are all okay. I see the green bars moving, so my sound is being received. But unfortunately, some are having big problems. But anyhow, if you're hearing this, then apparently you're not, so that's good. Um, for the trend line break, do you suggest to have limit orders? Well, it depends. Sometimes yes, mostly no, I would say, but it depends how much I like the break, how much I value that setup, basically. If I use pending orders if I think there's a good chance of success, a higher than average chance. You know, a 70, 75, 80% chance of a trade working out. There's a good confluence. Um, and yeah, that depends from setup to setup. So if this Aussie wasn't good enough, if it is a pending order, let's see, then one could use this bottom here, for instance, or the candle low for pending orders. But I'm not sure if I would do it in this case because I think I'd still want to keep an eye on this particular candle probably. I don't know. It's possible though. Dollar CAD is moving up. And the break continues after the trend line. I don't see any trade at this moment, personally. Pound yen. Pound yen making the bounce here. That's something I was expecting indeed because of the momentum and the hook back. Was expecting a continuation. And if we put a fib from here to here, we can see it bounce and continue. So that looks pretty strong at this moment. And there was a good breakout earlier today. That was also a triangle on a 5-minute chart that looks pretty decent. So taking that breakout would have been perfect right in here. That's the breakout. At this moment, we're looking for a pullback and a continue. So price would be good if price gets back to the long-term moving average. Sorry, the short-term moving average. So I'd like to see price get back to this green band, these three green moving averages, and then break above it again. All right, so let's see pullback continue. That looks pretty good though. I think if we look at the momentum, and the fact that we had a 78.6 fib bounce, so it looks pretty good for continuation. For our chart, well, I can see your question. To me, it looks like a potential reversal because of the fact that there's a potential inverted head and shoulders. There is double divergence between these bottoms, which is that's a strong, I think, the strongest argument for a bigger retracement. I see momentum here, so that leads me to believe that this could be a bigger ABC zigzag to the long-term moving average. So if we then dive down to the 4-hour, I mean, from my wave perspective, this could be a 5 wave. I think it's definitely possible to see that. I know that this was strong momentum too, and I can see anyone pointing to these falls and saying that's strong too. But because of the daily double divergence, the head and shoulders pattern, the 5 wave of the 4-hour, and the fact that the momentum happened more at this part than in the middle, it leads me to believe that this could be an ABC. If that is that, then and this is a 5 wave, then the next prevailing momentum is, I mean, considering those things, probably upside. Euro is more of a mixed bag, I would say. It's a lot of downtrend lines. I would not be trading this. It does not look good to me. Maybe to the downside, but because it is in a downtrend, right? If it breaks this trend line, perhaps. All right, but does not look very exciting to me. Let's see, QE. Kind of messy too. Good channel, break of the channel, plus price is staying below that channel. Triangle on this 4-hour chart. Break of this triangle. Well, we don't have a hit here yet, but if price bounces and then breaks, that could be a good breakout. But what I like to do actually is, if we get a big pattern like this, what I like to do is wait for the smaller pattern on one time frame lower. It's something we discussed in the Pro Learning Lab webinar. So what I like to do, this is a decent sized pattern, right? Or here. So use this 1-hour break, then zoom into the 15-minute chart, wait for kind of a correction on the 15, and take that break. Now the reason why is because if it's a false break, you don't get trapped into a breakout here. But if it's a good breakout, you should see a kind of consolidation after the break. And that lends itself to entering the breakout at a bit later spot, but at a spot that we know that the breakout is probably going to succeed. So it's a little trick I like to use with regard to breakouts. Look at the chart, where the pattern is big, like this. The 4 hours actually it's a bit too small. This is a big pattern on the 4-hour on the hourly. Then dive in one time frame lower, either to the 30 or 15, to wait for the smaller pattern after the big pattern break. All right, what else? Euro pound. Yeah, pretty good retracement. We were talking about it, and back to that pattern, and it did move up there and bounce from there. So anyone looking for that got a good trade at the resistance, and it's well on its way down to support. All right, now my bearishness on the pound did not come to fruition, unfortunately, and you can see how strong the trend can be. I mean, to me, it looked pretty good. You got a head and shoulders, you got double divergence, but nope, you got respect here. So anyone who took that trade, by all means, hopefully didn't lose, because you got plenty of time and space, 100 pips, to take some profit or probably move it to break even at the very minimum. Hopefully, right? If you didn't, then it's something that for next time, please realize that no need to keep the stop loss all the way up in here. At least minimize the risk by moving it up to this candle. So we get a continuation, and just shows you sometimes how long it can take before price makes a reversal. And now we're in this channel, and to me, it doesn't look like a good trade, because now we're right at resistance. But EURUSD, same thing, kind of respected the 61.8, made a dip down, but then found support again, and is moving higher. So this is starting to look like obviously an ABC zigzag and not a bigger reversal. We still have this kind of supply and demand zone to box through though. That could easily be a turning spot for not a reversal spot, but it could definitely be a retracement spot. And then we'll have to see if buyers can take over again. Oops. Let's see. There you go. From my perspective, not very, very exciting to trade at this point. I think it's not a good position. Only thing could be good is shorts, perhaps, just for a small trade. Euro pound. Do I suggest to trade the euro pound? I don't like to trade the euro pound, to be honest. So I don't trade it. I hardly trade it. I look at it just because I think someone asked me yesterday. But also it's sometimes good, of course, just to get a feel how the euro and pound are doing it in relationship to each other. But I'm not a big fan of that pair. And that's important. I mean, and that's important because you want to always trade the ones that you have a good feel, good vibe with in a way. Sounds funny maybe, but you know that some pairs just don't have the movement that you like to see, and it's probably best to avoid those. All right. Other than that, I think we're just looking at minors at that point. So from this pack, I'm not sure. At this moment, the euro dollar I think is the most interesting. If it were to make a retracement, it doesn't seem to be doing that at the moment, but that I think was the most interesting. Dollar yen could be interesting too, the upside continuation. Pound yen as well. So I think those three are probably my favorites at the moment. Dollar yen 4-hour chart, pound yen 5-minute, 50-minute pullback, your dollar 2. Okay, so today, strategy-wise, I wanted to dive into using the 1-hour band and the 5-hour band. The 5-minute band, sorry. All right. So when basically the first condition is to have I just wanted to dive into a strategy that I mentioned 2 weeks ago, I think. 1-hour chart, you want to have the EMAs aligned to, for instance, here, this 1-hour EMA band clearly in the downtrend here too, right? So once we have that, we can dive into the 5-minute chart. Let me put a line there. All right. What we're looking for here is basically for price to go back to the 21 EMA band and close below it again. So in this case, the first moment that we had a downtrend on the hourly chart was here. This is a green line, vertical line. We're waiting for this price to get back into that 21 band and then close below it. So that would be this one. All right. So that would be a breakout trade right there. And it didn't go all too far, but it didn't go against us too much, as you can see. And eventually price basically making the breakout. Now, from this point of view, we have actually some other setups as well, as you can see right here, and here, and here. Those could have been potential entries as well, because the same thing happened. Now, would I take all of them? No, I don't think that is not wise, obviously, because price is at the same area. But those could have been entries too. And even yesterday, in fact, right here. Okay. Now, eventually, there could be multiple setups that do this, but eventually we don't want to take them because probably price is extended too far. You want to be a bit more cautious with taking breakouts like that because then price could make a bigger retracement. All right, so you got to find that balance. I think that the first two are always okay. They're good. Sorry, the third is okay. You know, when you get into the fourth or fifth, then it's a bit riskier. So this was let's say that this was the first one. This is the second. This is the third. Today was the fourth, more or less. If we grouped them together like this. First, let's call this all the same moment, 2, because it's so close. This is 3, and I will not count these separately, and then here, let's say 4th. Sometimes difficult to count them, but and this could have been a breakout here, or perhaps even here, but the first candle close was here, below it. So an entry there, just before our webinar started, and the price has fallen some 15 pips. Not a lot, but it's going and pushing and continuing downwards. So from this perspective, it's extended quite a lot. So I was talking about a retracement, right, myself, from here to here. I've had the fib, so now I would like to see this fib. Obviously, I'm going to move that fib. So it would be good to see price hit the 61.8 fib and a lot to moving average. And that could be a trade right there. From a 5-minute strategy point of view, if price does that, then I would like to see price break below it, basically below the 21 EMA band. That would be a breakout. Now stop losses, let's take this example here. I use pivot points basically, but I don't have pivot points on here. But that's really from a different system. I mean, if you use moving averages, purely moving averages, and the breakout is taken right here, then often enough, 2 fractals back is more than enough, right? This is a fractal, this is a fractal. But even the most recent fractal could be good. But sometimes it depends from case to case because you see, when you have a flat zone like this, using the most recent fractals is a bit tricky just because of these small little spikes. That could take you out unneedlessly because look, price didn't go really anywhere. You see, it was just flat. So there should be no reason to, I mean, it would be a shame to take a loss there after price does this, right? So from that perspective, when price has a good angle like this, often enough these fractals are fine. If price and the angle starts to, dip like this, then often, it's going to be a bit more bumpier. And in that case, probably it's better to go to a fractal that is a bit away from that, either all the way here still or up in here. And that's why using pivot points still is a good addition, just to get a sense where are the support and resistance levels of the day. Alrighty. You can see here when it gets a bit more angle, right? These fractals are more than enough. Price just keeps going like this, and there's really no serious threat to any of these two levels, right? It's just one continuous fall. There's no reason to no stress in that trade. No chance that the trade will get stopped out. So let me see. Let me go back to the hourly chart. Alrighty. Different zone. There we go. So this is where the downtrend is in play on the hourly chart, and a very simple breakout here of the 5 minute below the 521 EMA band, right? And that's it. All right. And here's another pullback and continuation right there. That did not go. That it didn't go anywhere, but didn't go as nice as the other one. But sometimes it happens. You get these long consolidation zones. But also look at where the timing of that breakout. It was at somewhere in London evening. All right, so the volatility is out of the market. That's why. Despite that, prices went sideways, as you can see. Okay. All right, so London Open, and we get again a push below the 21 EMA, and boom, look at that breakout again. All right, now in this case here, this is a spot where anyone taking that trade would not have done that well. But don't forget that it's not really a setup. This is not a setup, and look carefully at the difference. The 21 EMA band, right, was only partially green. We really want the whole band to change. So that's why that this is a setup here. This is a setup. And this one is, right? But this one isn't. It's too shallow of a pullback. Also realize that, if you have momentum like that, that this is going to go back to the zero line. I like to use this oscillator. I would like to see at least price get back to the zero line before taking any breakout trades. If a momentum like this already has happened. Also realize that I use my time fracture rule, but this is not needed, but it's an addition to me. 1, 2, 3, 4, 5, 6th candle, right? So this is taking too long. This was a momentum because each candle was pushing lower and lower, or almost each candle. As soon as 5 to 6 candles don't go along with that flow, there's a good chance of a more serious correction. And you can see that. We had this hump here, right? This bump up, and we didn't get a follow through anymore. Actually, what we got was a bigger correction. So that changes with this setup right here. These things have, that breakout is nothing necessarily. It's not a good timing, as you can see, because there's still a bear flag that happens after that. But it does have everything aligned. The oscillator is good, and price has gone through 21 EMA. So there's nothing we can say about that really from that entry. And we do go through a bit of a drawdown through that trade of 11 pips, but that's not too much. Stop loss above this level or this fractal is enough, as you can see. And then eventually price makes the dip. Anyone with more patience could have entered here again or first time. That would have been a bit better timing, but we never know that beforehand. And down it goes. Now this entry right here is not so good from a timing perspective because again it's already London evening. Also, this is not a good setup because this is the first hour after Asian Open. Not a good time to trade a breakout like that. All right. So it's very simple, and you might wonder how, is something. I think it's simple at least, but this is of course maybe not true for everyone here. But it's very intuitive. Just look for basically the momentum on the hourly chart, and look for a break pullback continuation on the 5-minute chart. So that's I think the idea is straightforward, probably, but I'd be careful of the timing. Be careful of when the trade is taken. All right, so let's see. S&P 500 and ASX 200. Let's take a look. S&P 500. Well, yesterday I was saying basically that considering the lengthy sideways move, I wouldn't be surprised, and the big bounces we've had at support, I think that this resistance obviously is not going to be easy to break. So a bit of a dip from there, one more dip, might make sense. But considering the strong support, I don't see that break anymore that quickly. I was definitely inclined to the potential of a bigger retracement around here, and even here. Now I have a bit of doubts if that we really get a big downside here. This could just go sideways, and I wouldn't be surprised to see basically price use the support level, the support zone for a bounce. So any of these fibs, I think, could be turning spots. But it's not easy. I think a graph to look at. It's in a correction. It's in a big correction. So there are a lot of things that can happen in this zone. Just because corrections tend to be, especially when lengthy like this, can be difficult zones to trade. So from that perspective, I think it's not interesting because of this very fact that it's so it's in such a choppy zone at the moment. ASX is not something I've seen, but maybe I haven't found it yet. Let's see. I don't see it myself. But we can take a look at silver. Silver has finally, for the first time in a very, very, very long time, posted a higher high. In fact, the last time we saw a higher high was almost 6 years ago. Otherwise, there have been only lower highs. Good candle as well. Obviously, still in the downtrend, but considering these factors, this could be a pullback. No divergence on the daily chart, so that seems to be a good potential there for indeed turning to be a retracement for more upside. So the 50 fib, I don't think the price will break below the 50 fib. You got a supply demand zone here, you got tops in here. 50 fib, I think, could be a bouncing spot, if not the 38.2 already. And if price breaks above this trend line, that could be a good 4-hour breakout right there to the upside. So let's see, price could continue in this channel and make it down to the 50 and then turn or breakout. So I'm slightly bullish just because of the current patterns I see. Same is true for gold at this point, but it's been a choppy breakout, but a break of this trend line could see that continuation to the upside. A break of this support line could mean a bit bigger correction still. So that's a good triangle, and I think the break will happen probably to the upside, but if it does happen to the downside, I think there's still plenty of support left for price to make a bounce somewhere at these tops here. Sorry, no, that's already happened. Sorry, somewhere at this trend line. And in that case, we could see a zigzag maybe down to the 272 target. Oil had a good break of this trend line, break, small little bull flag. This is what I mean with the pattern after the pattern, right? This is a decent pattern on the hourly chart, right? We got a wedge or a sideways zone here, right? And it's sizable for this time frame. So once we get the breakout here, wait for the 15-minute or 30-minute pattern after the break. Here we go. It's a bit strange. This was the first one, to be honest, right here. All right, and we got a continuation. Now after that, we even had a bigger pattern. We had this was the first little pattern, and then we had actually more patterns which occurred here. Another pattern of a triangle. So this was the flag. This was a mini flag, right? And then we had a decent bear flag. So both could have been good breaks, in fact. Good breakout trades. So let's maybe talk a bit more about moving averages and patterns after patterns. Does anyone have a specific pair you would like to take a look at? I'll let you choose. Just let me know. Upon respecting that that pink line right there. CAD yen. Sounds good? Let's dive into the lower time frames first of all. Hourly chart. Hourly chart really doesn't have a trend, unfortunately, so we can look at other stuff, but the moving average strategy would not work out because we're looking for a trend. At this point, the price is in between the long term and short term, really. This long term is 144 and 169 EMA. So it's caught there, but we can take a look at other pieces of the chart. For instance, here with the upside already. There you go. Alrighty, so this was not a setup because price didn't really dip below the 21 EMA here. Okay. Then price retraced deeply, so we need everything to align again, which happened here. And let's see, we had a breakout here. Now that was one of the examples that would have been a loss, right? Because any stop losses below here would have been taken out. If not here, then certainly here, right? So that would have been a loss. Let's see, then we want everything to be aligned again. And okay, let's see. Right here. Right, because this piece, I mean, if a more aggressive trader could have maybe traded something here, all right? And the reason why I say that is because we had basically a break above it and a pullback and continue, You see that? That's important. Now the long-term moving average was just a tad still above the 21 EMA. So technically, I mean, it's not the best because of that, but the theory is still the same. We got the break, you got the pullback below the 21 EMA, and you got the push above it again. All right. So from that point of perspective, it did match. So that could have been one. It's a bit more aggressive entry though. All right. This one is better a bit because now you have space between the moving averages. You see that right there? So that's a bit better. And that one went up. You see the moving averages change, right? And then the break above it again. And that went up very nicely. All right. So here too, this could have been a more aggressive entry because the moving averages are on top of each other, but the principle is the same. Break, pull back, continue, right? And here the trend already changes. In this case, we didn't have a setup because we're looking for a break, pullback, and continue, and the continue never happened here. You see that? So this was not a setup. It didn't push above the 21 EMA here. And then here we had already the downtrend. So you had two more aggressive setups here, one good setup, and one loss, I think, somewhere here, right? No, here. This was also a more aggressive setup from that point of view because we had a break, pullback, continue. Could have been an entry, but it's a more aggressive one. So three aggressive entries, one normal one, one loss. Now from a pattern perspective, all right, let's take a look. Where can we find a pattern, basically? And what time frame do we see a pattern? Okay. Now we see on the daily chart, we do actually see a pattern. It's a channel or bear flag. Normally I don't look at bear flags on such high time frames, but it's a channel. Okay. 4-hour chart. This is what we got. 4-hour chart. Okay. We don't really see. So from a daily perspective, if this channel breaks to the downside, we'll be looking at a 4-hour chart for the break and a little correction, and then trying to take the next break. All right, because the daily chart we see a pattern. The 4-hour chart, I don't see much of a pattern. I see impulse, impulse. Maybe if price breaks above this trend line. I don't know. No. Otherwise, I don't personally see much, but maybe I'm missing something. But let's take a look at maybe a different pair here. Kind of like a triangle on a 4-hour chart. So on an hourly chart, we're looking for basically a break, pullback, and continue. And we cannot see it maybe on the hourly too good, but on a 30-minute chart, you would definitely see it pretty good right here. A bit of a bull flag. So the break here, the small flag, and the break above that flag, that's ideal with, pattern trading. And you can see right here that's the breakout candle, and it just boom, straight up, right? And we're talking about a good number of pips here, potential to capture 108 total maximum before getting a retracement. So those are great because often when you get the breakout, moving averages start to align. You got good space between them, and if it then continues after that small pause, you really often see a good momentum continuation. So one of my favorite ways of trading momentum, really. Really great method, I think, to capture momentum and continuation. Now on the Aussie, could we have is there a way to have, taken that trade? Well, we need to find a chart where the pattern looks pretty big. So what I'm talking about pretty big is about, this is on the small side still maybe. I'm talking about a pattern that looks like about this, right? But okay, this could be doable still. Or maybe even the 50-minute chart. Let's see. It has to be visible on one chart. So it's either a 15 or a 30-minute pattern, right? A triangle here on the Aussie. So we're looking for a small pullback, a small pattern after the break of the pattern, right? Remember. Now, do we have that? Not really in this case. We got to break, pull back, and more or less continue. The pattern that we first bump into is actually all the way here, I would say, with an ascending wedge. So the break of that would have been here. The trade is not doing too bad. Sorry. The trade is not doing that bad, right? But the pattern happened a bit on the late side. The break happened when the break continued for a while before we saw the pattern, the smaller pattern. How do you set the price target? Is fib level a good price target? I love to use fibs indeed. I use important levels too. Like on this Aussie, if I am in this 5-minute breakout here, right? Let's see. Then on the daily chart, I'll be looking for this confluence right here. And I was already talking about the 61.8 fib and these tops. So I like to use tops and bottoms like this, strong levels, fib levels too. And for intraday trading, I would definitely also look at pivot points. So I try to look for confluence, try to judge which level has the most appeal, has the strongest kind of attraction, but also the strongest potential to turn it around in the opposite side. So fib levels are definitely part of that. Now, if you're trading patterns, then typically when we look at pound Swiss, for instance, I mean, an entry here with a stop loss below this flag, typically should be okay. 5 pips below that, right? Something not right at it, but should be fine. So for the Aussie, an entry there with the stop loss above this point, but probably even above this one is a bit better, right? That should be fine. Of course, there can always be the fact that there is a break, pullback, continue, and the continue just fails. I mean, it's not a foolproof idea, of course, but typically it works pretty well. Now, if this falls tremendously a lot, you want to be careful because you might not get a third leg like we do here. Alrighty, folks. Well, do you have any specific questions maybe you would like to ask about any of the two ideas here? I know I've been talking a lot, and it's always a lot of information coming at you. So I think that it's maybe best now to ask you if you have any specific things you would like to ask about any of the two ideas. Look at the euro dollar, for instance, right? This was a 30-minute or 15-minute pattern, to be honest. Maybe even more of a 15-minute pattern, you see? Now, did we have any 5-minute pattern after that? And in this case, I don't think so. Well, maybe actually here. Descending wedge. Let's see, for channel trading, do you target the other side of the channel? Otherwise, it reverses halfway in the channel. I actually don't take many bounces, but if you take a bounce trade in a channel, and if you're trading something like this up in here at the channel, it's a good thing to target halfway indeed. Sorry, to target the bottom, the opposite side. If you're targeting halfway, it's possible, but it's conservative because it's just halfway that channel. I mean, if you have reasons, if you see strong confidence halfway that channel, then why not? It might be better, but typically, on average, it's okay to aim for the opposite side or the breakout, in fact. So let's see what the pound happens. The euro dollar is moving down, but the pound isn't, and the pound is challenging the resistance. So I think looks very close to breaking. Let's see how it pulls back and if it's worth taking an intraday long. That's what I'll be keeping an eye on. Same, I'll keep an eye on the dollar 4-hour chart, dollar yen 4-hour chart, and I'll keep an eye still on the euro dollar, but it's going to take some time. I would like to see a pullback and continue. Now the euro New Zealand, we didn't talk about it, but it could have. Let's see, it could be making kind of a correction here on the hourly. So if it breaks to the upside, I'll be looking on the 50-minute chart, right? Break, I'll be looking for a pattern on the 50-minute chart and a continuation of that. The other thing could happen is a break to the downside. If that break happens on the 50-minute chart, I will zoom into the 5-minute chart, look for the break here and look for a pattern on the 5, and then look for the continuation of the 5. Why? Because on the 50-minute chart, you can see a pattern too, not only on the hourly. So this is an hourly pattern, right? But there's also a 15-minute pattern. Alrighty, so, well, I really appreciate your focus. I know, it requires a lot of energy to pay attention to webinars, and I really appreciate your dedication and efforts to be here. It's a great job, and I hope to see you next webinar. Admiral Markets, of course, has a lot of content analytics through social media. We got a lot of webinars lined up for next week. Well, first of all, we have tonight actually more webinars. Where's my webinar tab? I don't have it anymore. Okay. Well, we got trading fakeouts. That's going to be interesting with Nenet. Tomorrow we taking a look at support and resistance and how to trade it. Advanced methods for trading the markets. with support and resistance. And then next week we got a lot of webinars Monday and Wednesday evening, Tuesday and Wednesday morning, and then Thursday evening again. All right, so wish you all fantastic trading, folks, and see y'all soon. Cheers.